What's going on, everyone? Today I'm bringing you a stock that can 10x or even potentially 100x from where it is now, and that company is Interactive Game Technologies, ticker symbol BETS, and it's called Blitz on the OTC. This company is going after the online betting market, especially in an area that hasn't been captured yet. This company has a lot of news in the pipeline with an amazing team, which we will get into later on, and I'll explain just how big this opportunity could get for us. I don't want to convince you guys. I want you guys to hear the facts and come up with the value yourself. So without wasting any more time, let's get right to it. Hey guys, welcome back and thanks for tuning in. My name is Gagan Grewal, and if you haven't already hit the subscribe button up here, I think it's down here somewhere, then you know what to do, or just hit the like button, that works too. So before I start, I just want to mention that I'm not a financial advisor. These videos are for educational and entertainment purposes only, and any type of investing involves risk, so please do your own due diligence before purchasing any stock or security. But that being said, let me help you do your research. So first off, I want to give you guys a little overview of the market and why I believe that this company will grow very quickly. So first off, online gambling worldwide is about $58.9 billion industry right now, and it's growing. From this picture, you can see it's going to be growing quite quickly, and by roughly 2027, it's projected to be at $150 billion, meaning that in the coming years, this market will be more than doubling, and so will all the companies along with it that can capture the market. And a lot of this growth has to do with sports betting being legalized in the United States by the Supreme Court in 2018. And Canada just finally legalized single event sports betting in 2021, just a few months ago. And this allows online gambling companies to expand a lot further. So Interactive Game Technologies' idea is to transform the future of online and mobile gaming with entertainment-based products for sports betting, poker, and casino players. And the reason why they believe they'll be more successful than DraftKings and FanDuel is because they aren't spending thousands of dollars to acquire these customers. And we all know the cost to acquire the customers is the biggest thing for online companies, especially online casino gambling companies. So DraftKings and all the big players are going after the US market because it's one of the largest, but Interactive Games is actually going a different way. They started in India because of a very few important things. So one, India is the fastest growing online gaming market in the world, and number two, with a growing population, especially in the middle class, 75% of the population is under the age of 35. So India is the perfect place to start because everyone is trying to make money. It's not a very rich area, rich country at least. A lot of the population is in the middle class or the lower class. And this is also why Facebook and Amazon are all trying to invest in India now as well. So Bets, they saw that it wasn't overly crowded there, and after some time in the market, they brought their cost per acquisitions down to lower than $25 per customer. I'm gonna say that again, guys, lower than $25. That's very, very cheap. Because compared to like DraftKings, their cost is anywhere between like 400 to 800. Like $800 isn't uncommon, and there's even some companies in the US that have their cost per acquisition around like $1,200. But of course, these are 2020 stats, so things may have changed in 2021 a little bit. And I'm not trying to badmouth DraftKings either. They're a very good company to own, but they're already one of the market leaders. So the potential gain in bets is just a lot more in my opinion, because their market value is sitting at only around 70 million compared to DraftKings, which is 25 billion, right? So in India, they pay around 25 for a player, and it's worth around 150 to 175 dollars. And of course, the average DraftKings player is worth around 5 to 600, but they also pay a lot more. And the reason why their customers are worth a little bit more is because DraftKings has a lot more product offerings, which Bets will in the coming years have as well. So this company brings in its revenue from mainly three of its brands: Blitz Bets, Blitz Poker, and Blitz Pools. Blitz Bets, its key focuses on the major like North American sports, as well as like international popular sports such as soccer, tennis, and like many of the other ones. In this platform, they have access to over 1,000 games, and they have Ian Mormon running it. And he was previously in charge of setting up the VIP trading platform at Bet365, and he's built that to over $100 million in sales. and he's done that and now moved on. So he definitely has some good experience building that. So I have no doubt that he can definitely bring Blitz Bets to grow very quickly as well. And then next, Blitz Poker. So they have a partnership with Dan Bilzerian. He was a great poker player with lots of followers. He's talked about his poker career on Joe Rogan's podcast on YouTube, which has a lot of followers as well. He's played in the World Series of Poker, so he definitely has a good following base there that he can influence. And then lastly, Blitz Pools. This is a skill-based fantasy gaming market in India. They already have 150,000 new registrations, and they expect to have about 250,000 new players this month. So with these three platforms, this is how they have everything from casino games to sports betting to skill-based as well. And if we combine all of their platforms, they have a roughly around 2.7 million registered users, but that doesn't mean they're all paying. So their CEO said that roughly around 55% of them will actually convert to paying customers. And if we just take their 55%, let's just say out of the 2.7 million, 55% convert, and each customer in India is valued at around 150 to 175 million. Just doing that math, guys, that's alone worth over 200 million. And this entire company is only valued at 70 million. So you guys can see the value in this company, and it doesn't just end there. They're definitely increasing their reach by partnering with Indian social media influencers like Bollywood celebrities, cricket stars. So they partnered with, so this is on their website, by the way, you guys can go definitely check this out. It's only 3 mentioned on here, but they partnered with 5 cricket stars, and this helps them attract the large fan base that they're trying to get onto their app. And their partners just don't stop here. They're continuously partnering with others that they haven't actually released yet. They said that they'll be giving out news releases a little bit later. But this company is definitely very impressive. Like, they're holding licenses in the UK, US, which they recently acquired, and they're also going to be expanding to Canada as their local company, and they're based in Vancouver. And you guys might be thinking like, oh, they partnered with cricket stars? Okay, like how big could they potentially get, right? I was thinking the same thing, but after a little bit more research, looking into it, guys, cricket is huge. It has 2.5 billion estimated fans. It's in Asia, Australia, UK, like it's everywhere. It's number 2 on this website. If you guys look on any other websites, it's at least always number 5, ahead of like NFL, baseball, golf, and all the other ones. So with 2.5 billion fans, they have a lot of room to run. And especially in the US, like once they start expanding into the US, the opportunities are endless. And the reason why they started in India was because they wanted to actually become like a revenue positive company. They wanted to make some income. They wanted India to be their cash cow, and then they wanted to use that money into the US. Whereas a lot of these companies are doing the opposite thing, right? They're starting in the US, blowing billions and billions of dollars on marketing, and then slowly, like 10 years down the line, they think that hopefully they'll have some revenue. But that's why interactive games is very special, because they're going to be making revenue, they're going to be positive, and then they'll be releasing all their stuff in the US. Last week on March 16th, they announced their plans to enter the US gaming market, and management was in talks with US land-based casinos to partner in building and managing a digital gambling platform and offering. So this is huge, especially with COVID, all casinos being shut down, having to pay all their fixed costs still, like building rents. Every industry is slowly trying to find new ways to move online. So this kind of partnership would be mutually beneficial for both companies. Let's just imagine, say for example, they partner with like MGM. It would be their employees, their marketing, but they would help these casinos launch everything online, and they would just take like 40% of their gaming revenues. So they don't really have much to lose. They're helping these land-based casinos, and they're making money. And this is a deal that they've already signed. We just don't have the exact specifics of it. But according to the CEO, he said it's a multi-billion-dollar opportunity, and the contract is for 8 years out. So that's very good to hear. Hopefully we'll be getting some news on this very shortly. And I'll keep you guys updated with that. So that was a breakdown of the company without any of the financials. I don't want to spend too much time on this because these aren't audited financial statements, and they're not annual statements. They're only interim. We only have it till September 30th. But let's just give you guys a really overview, basic understanding of what they have in their bank accounts. Their current assets are at $750,000. and their total liabilities are at 560,000. So they can easily pay for all the liabilities, so they aren't going to be shutting down anytime soon or going bankrupt. So you guys don't have to worry about anything like that. And looking into their profit and loss statement, so for those 9 months, they had $28 million loss, and around 20 million of that is accounted for just the listing expense to go public, because they went through a reverse takeover. So a company bought all their shares, and they were able to list on the stock exchange a little bit quicker. And for that transaction, they had to pay about roughly $12 million, like you guys can see there highlighted. And then the next big charge is share-based compensation. So 9 million was for share compensation, because not a lot of their management takes salary. Like their CEO takes zero salary. They take stock options, which means that their management is willing to take the shares instead of cash, making me believe that they're confident that they can make this company grow and help their own shares become more valuable, right? Because they have more on the line. So the CEO also said that he had to structure the compensation this way for like all the other people in his team, for them to leave their current roles in those billion-dollar companies that they were at, like PokerStars, Bet365, all of those, because this way they have a higher upside potential. So if the company sells at around $10 a share, most of the management team will have exits of over 50 million compared to what they were getting at their previous roles, maybe a couple 100,000. So I'm totally fine with this. This is exactly how I would want it to be. I wouldn't want them raising any money and paying their management team millions of dollars without having any solid revenues. So this just shows me that they believe in themselves, and they know that they will be growing. So now getting into the very, very exciting part, let's talk about the actual valuation and the multiples. So the average multiple in India is trading at around 25 times the revenue. Bet's revenue, they should be doing around 20 million in revenue in India by the end of the year. So this puts them at around 500 million. But of course, when a company is trading in the pennies, it doesn't get as much exposure. So these types of companies usually go up randomly and kind of just all of a sudden. So like it could be trading sideways at around like the 50 cents for 6 months, and then randomly it'll shoot up to $2, right? So you guys want to get in as soon as possible. I really wanted to make this video a little bit sooner, but on Friday the stock popped 20% because the CEO did an interview with Wall Street Reporter. It was a really good interview. You guys should go check it out. It was about an hour and a half. I watched the whole thing, kind of just summarized it all up for you guys. But if we look at like the 1 month chart, it's just been dropping. Like the whole stock market's been dropping along with this stock. It's dropped over 50%, and it just started kind of going up. I can't really predict how it'll be, but I know for sure in a year or two, this stock will not be under $1. So definitely go check this out. And if you guys liked my video, if you guys like the information I provided you, please hit the subscribe button and hit the like button, or say something in the comments. If you guys disagree, definitely let me know in the comments whatever you guys' opinions are. If you guys like this video, let me know that as well. Until then, I'll see you guys next time.